Alrighty, guys. Good morning. Welcome to this Thursday, June 26th. And we're almost wrapping right into that July 4th week. So far, the market is holding on to their gains. We are looking at the making new highs in the overnight. It almost feels like they're ready to break out. They almost feels like it. I mean, there's too much good news behind us right now for this market to be able to knock it down. It could obviously change. Could just be a big fake out, but I'm gonna keep my fingers crossed that we have a breakout on the way here. Now, the news this morning, we got a ton of stuff coming out. Durable goods, right at 8:30, that is. Durable goods, GDP, international trade, jobless claims, Chicago Fed, corporate profits, retail and wholesale inventories, all coming out at 8:30. So a ton of news coming out. The GDP is like a second or third read of the second or the first quarter. Um, then after that, we get pending home sales at 10. Nat gas report at 10:30. 7-year auction at 1. So that's what we got going today. Then on Friday, tomorrow, we get the personal income number. That gives you that PCE index, the inflation read. That's going to be an important number coming out tomorrow. But today at 8:30, we get the bulk of news, and then it's pretty much quiet throughout the rest of the day. So looking at this, I want to start off on the long side. I mean, we are making new highs. I think we are right up here making new highs right now at the 6170s. And let's see if they can keep that going. Now, it's always that risk that you see this grind to the upside and a hard knockdown at one point. But I'm going to stay on the long side. My shift is going to happen at the 6130 to 6125 here. So these two support areas, if they come out 6125 and 6130, I'll change my bias, take off the long bias, and at that point I'll probably look for a retracement trade. And maybe they can retrace this pretty quick down to the to support here at the 6,000, 6,100 or 6,080s. So that's the caveat for today's trading. They're going to buy weakness, watch those lower support areas they come out. I'm going to stay and hop on the short side. Definitely take off the long bias, but just hop on the short side and see if they can take it lower. So early on, looking to buy against the 6160s, 6150s, 6140s, 6130s, 6125s for rotations and back up again. So there you have it. It's fairly straightforward stuff. On the way up, not going to be aggressive on the short side. If this is a move out of the middle in the making, you don't want to be aggressively stepping in front of it. Doesn't mean you can't take short trades. I mean, I think there's certain dynamics in which case you want to take that short trade. If you start seeing them start running the lows here, or start running support areas, hoping on the short side is definitely an opportunity. Yes, have to be mindful that you're looking at buying early weakness, and any short opportunity should be viewed in that context. So they start breaking below support area and you have a decent setup. Okay, fine. Try to go with trade and see how far they can take it. Sometimes you get on a great trade that way. When they run it just halfway down this range and you have a beautiful short trade you could have been part of. It's usually pretty volatile though, and it's difficult to stick with a trade if unless you give it more room. But it's definitely possible. So we're looking to buy weakness early on this morning, 6160s, 6150s, 40s, 30s, down to the 25s. The 30s and 25s below that, I'm taking off that long bias, going back range band, maybe even to the short side, depending on what it looks like, and looking for a retracement trade at that point. So this takes out this area right there on the F1, and you can see we can retrace this all the way down here to that 60, 70 ledge if they start retracing it. And that could be a pretty good move to the output to the downside if that happens. But we'll stay on the long side at least to get started. There's plenty of good news out there. The NATO summit seemed to be pretty successful. Got Europeans to pay up 5% of the GDP. That's unheard of for defense. So shifting some of that defense burden onto Europe. And of course we had the Middle East situation calming down pretty quick. So that's is holding. That ceasefire is holding now. So that I would say that conflict is over. Maybe not in the long run because it has been going on for 1,000 years, but probably uh, the short term. The short-term shooting is over. So that's how we get started on the ES. Looking at the bonds and the NASDAQ, bond market, range bound, and I would just stay range bound. They have been drifting to the upside lately, but they're pretty much still trading in this general range. And just to remind you, uh, I keep my F1s on a different screen. It says glance over them. This is perspective. This is closer in, zooming in on perspective, and that just gives you an idea where you're at. So we are up against this volume edge. So looking for shorts against that 115s right now. For rotations back down. If they take it out, we can see a move right up here to the 116s. So that could be a nice move to the upside. But definitely range bound, looking at, so they haven't really moved a whole lot. They don't move direction a whole lot. They've been grinding to the upside slowly. So if anything, I would favor the long side, but for the day session, more like range bound trading. And this upper H, the 115s, definitely looking for short setups against these rotations back down again. And if they start trading below, I would say the 114, say 114s down here, maybe look for the short side, see how far they can take it. But initially looking to buy weakness at the 114.20, 15s, 10s, down to that 114 even. All right. So that's fairly straightforward on the bonds as well. And NASDAQ is the one which has been leading us higher. I saw Nvidia just broke out to they had like about 150 now and holding. So and if Nvidia breaks out, that could drag the whole market, the whole tech stocks, the whole Nasdaq with it to the upside. And AI trade is alive and well. I heard an interesting dynamic or an interesting analysis. A guy, a fund manager, talking about how the right sectors are leading the market in the breakout. So that's a good sign. But we'll take everything with a grain of salt. And at this point, keeping our fingers crossed that this breakout is for real, and they can keep it going. So I'm looking to buy weakness on the Nasdaq against the 22,500s. No, so this is 22,520s, 22,480s, 440s, 400s down to that 380 level. Now these two support areas, the 410 and the 380 comes out. I think we are in this going to be in this lower range. We can see a retracement trade right there, all the way down here to this ledge at the 22,100s again. So it could be a 400-point move to the downside pretty quick. But they had to take out this area right here. We have an attractor at the 420s, low volume area at the 370 to 80s, and that's right there at that support area. It's a nice volume edge right here as well. That edge comes out. We start trading below it. Look for that retracement trade, shift your bias pretty quick at that point. But looking to buy weakness to get started, 22,520s, 480s, 430 to 440s, 400s to 375 to 80s. So these two support areas, the 370 to 380s and the 400s, that's the one I'm watching for potential shift in bias or shift in direction. So there you have it on the Nasdaq. Pretty straightforward. And when you have the market moving like this and making new highs, it's you don't have much to lean against on the short side. So I'm not going to be very aggressive at all on the short side. But it could be. I mean, you could see a nice run up here and a pretty hard knockdown, and that's always out there. But I would not be aggressive on the short side. I would wait for the knockdown to start happening. So if you start seeing and taking out that London low, maybe the next level down, yeah, maybe try a short trade and see how far it can take it. Because you never know when it's going to lean into it and then really take it lower. And that would be more technical in nature. It would be more of a technical knockdown, if anything. So that's how we get started on the ES and NASDAQ. Both of them are making new highs to get started this morning. Finally, oil and gold. Gold traded up above our level. We talked about this reverse retest at the 56, 57s. They probed up above it, one level above the obvious. Isn't that typical, right? So one level above the obvious, then they stalled and they knocked it back down again. And not hard, but a little bit. So They were up here probing in the capital flow above this volume edge into this low volume area. You see there you have the lower edge, and they came right back towards value at this point. If they so at this point you're gonna have to include that upper area, the 60s as well. So it's still looking for shorts against the 55 to 58 and the 55, 57 and the 62, 63 up here for rotations back down. But if they both of them comes out, I'm hopping on the long side and see how far I can move this back up here towards the 3400 attractor. And if they can't, they're probably going to be trading down here at the 3340s. That is your closest attractor right now. So expecting it, the way it looks now, I would probably expect it to rotate down here to the 3340s and probably stay there, go sideways. So that's, I'm not necessarily thinking that gold is going to start falling apart, but the geopolitical situation in the Middle East probably warrants gold prices to come down a bit. If you're concerned about the Middle East blowing up, and causing some havoc in the world, I mean that just got taken off the table. So could put some downward pressure on gold, but at this point we're going to still stay range bound and watch look for it to trade around that 3340s. So looking for short setups against these upper areas, and in the short term also looking for buying opportunities against, I should say, the 3340s, 35s, 30s down to this 25 level. Below 25s may start thinking about the short side. So the 3360s down to that 3325 is our range for a range bound market right now. On gold, now finally oil also in a holding pattern. Not quite taking that last step, but taking out that support area. And what I'm talking about is this low volume area. They probed it once, they bounced. They're holding right there above it at 65. And I'm just waiting for them to knock it out and head right down to that 61 again. So I'm thinking short side. At this point, since the ceasefire seems to be holding, not going to be looking for a retracement trade. I could certainly break apart again. I mean, it's early still. So if it starts coming apart and you start seeing them shooting again, and watch them take out this upper area, the 6630s. And if that happens, just hop on the long side and see if they can run it higher. But hopefully that ceasefire holds and there's no further aggression down there, at least not in any short term. So initially looking to sell strength, 6550s, 66, so 6550s and the 66s. Looking to buy weakness, 6475s, 6440s, down to the 64s for rotations back up again. Starts taking out that 65, the 66s. Maybe one level above it, 6640 for rotations back down, but pretty much range bound trading around this little high volume area. I think the key thing to look for is really if they're going to take out that 64s. At that point, stay on the short side. They're going to take it down to the 61s at that point. All right, so that's oil to get started. So oil range bound, gold range bound to get started. And let's see how that develops. Looking at the ES. Back to the ES, they all kind of where we left them. So we got a few minutes, about 10 minutes, and then we're going to see get the news, and that could certainly change things up. We got a ton of news coming out at 8:30, so let's see how that develops. Alrighty, guys, we'll wrap it there. Fairly straightforward, quick analysis. It's always easy in the market is making new highs like that. That's fairly easy to do it at that point. But it's the only caveat in that analysis is really that if it's something technical, they can grind it just a little bit higher and then knock it down hard and just takes you by surprise. But that's just something you just have to keep it in the back of your head. Alrighty, guys, good trading. I'll see you back at 11:30. Later.